Hey, welcome back to The Dive. Today we're chatting with Michael Gentile, who's a strategic investor, board member, and advisor with various publicly traded junior mining companies. But before we get into it, you know the drill. Could you do me a quick favor and like, subscribe to our channel, and hit that notification bell, please? Hey, Michael, welcome to The Dive.
Hey, thank you. It's my pleasure to be here.
So let's start off with your news from the end of December. You made a substantial investment in Group 11 Resources. Why is it that you find zinc an attractive investment opportunity?
Great question. But look, I mean, there's two things about it. One, they made a world-class discovery, in my opinion. They hit a hole with close to 10 meters of 35% zinc. So for those listeners who don't know what that means, I mean, that's basically one of the highest grade zinc holes you can hit in the world. So they're a very small cap. At the time, it was a $5 or $6 million market cap, which to me made a transformational discovery. That kind of hole typically indicates very world-class, very high grade, potentially very profitable zinc discovery. Got a world-class team there, really smart geologists, and the stock was really deeply under the radar, which I'm passionate about. Small caps, as you know, sometimes can fall through the weeds and not be properly covered. So it's a world-class discovery, very high-grade zinc in a great jurisdiction of Ireland, which is a safe place and a profitable place to do mining. And then zinc longer term, there's a lot of attention on nickel and cobalt and lithium for EV cars. You know, zinc is very important for long-term battery storage, long-term power storage. So as we get more and more demand on the grid, more and more electric cars in the fleet, you're going to need long-term battery solutions, and zinc has a very unique property. It doesn't blow up, doesn't get hot, doesn't explode when you put too much power through it. So I think zinc has a part to play in this EV evolution, but it's not getting the same kind of hype, the same kind of excitement some of the other battery metals are getting right now.
What do you look for in junior mining companies when evaluating the investment potential?
Yeah, it's a really important question. So, you know, for those of your viewers that may not know, like 95 out of 100, I say 99 out of 100 exploration stories that you look at are never going to become mines. They always stay exploration stories, and there's something that kills it from becoming a mine. So I have 20 years experience in institutional investment business where I saw a lot of companies evolve from very small into being big producers or significant producing assets. And so I try to look at that mentality of when I look at exploration story, even if it's really early, even if it's like Group 11 or $5-6 million market cap, does this asset actually have the potential to become a mine in the future? And if it doesn't, otherwise it's just going to be a promotional story or a story that may do well for a few years and then kind of fizzle out. So it doesn't have the potential to become a mine. And what does that mean? Well, one is the grade, the percentage of the material that you're finding in the ore that you're digging out of the ground. Two is the scale. Is there enough of it at a very high grade to become a producer in the future? Third thing is location. You know, if you're in a national forest or if you're in an environmentally sensitive area or in the middle of the world where it's very dangerous or politically risky to operate or governments that are unstable, that's probably going to stop you from becoming a mine. Another one would be infrastructure. Do you have access to power, water, roads? Can you access the actual mine site easily or not? That's going to have a huge impact on your costs. And then finally, the last two that investors often forget too is management. So they have the right team in place to define more of the existing material you're looking for, and also management in terms of capital markets. Can they properly finance it? Do they know how to navigate the stock market and raise money at the right times and get the financing in place to build a mine? So it's a pretty long checklist, but I really look at something very, very small saying, could this be a $500 million or $1 billion company in the future? And what are the things that could prevent that from happening? And if there's a few of them that are kind of red X's on them, then I'll stay away, no matter how exciting the story is.
So, what are some of the companies that fit the profile?
Yeah, there's a few. I kind of put my money where my mouth is. So I like to be big investors in things that I think have huge potential and have potential to be a mine. So I'm invested all over the world. I'm involved in a company called Roscan Gold. They're in Mali in West Africa. But what attracted me to them is that they are 5 kilometers away from B2 Gold's Fekola mine. B2 Gold's a very large gold producer and about 50 kilometers away from Barrick Gold. So they're in a very prolific district next to 2 huge mining companies that already have operations there that could produce the gold if a major discovery is found. Secondly, that we've already made a major discovery, very high grade gold, very, very large potential size discovery. Again, within the shadows of these 2 large mining operations already, 2 major companies. Thirdly, our management team has 34 years experience in West Africa. So if you're going to go into a country like West Africa, you know, I wouldn't recommend that you and I go into business there alone because we wouldn't really know the lay of the land and how to operate. But our board has 30, 40 years plus experience in the area. They're local West Africans. They know how things operate there. They know how to get things done in country. And we have a very savvy team in terms of capital raising and fundraising as well. So you have the right asset next to the right infrastructure with the right team and the right capital markets team to bring this asset into a producing status one day. That's one example. There's a bunch of others I could happily share with you in the future. I mean, there's Arizona Metals is a fantastic company in Arizona. Again, great jurisdiction, one of the highest grade copper producers and copper assets I've seen in my career. 6.5% copper is just off the charts good. Has huge scale potential on private land in a very mining friendly part of Arizona. And again, with a very, very good team behind it. And a little bit earlier stage one that I'm heavily involved in is Northern Superior Resources. It's a little earlier on the curve, but has 3 assets within one junior company. So 3 distinct assets, 2 in Quebec, 1 in Ontario. All 3, I think, have potential to become mines one day and trading in a very small valuation of market cap. We've attracted people like Eric Sprott, New Gold, some very large shareholders that kind of see that potential. And as you know, operating Quebec and Ontario are 2 of the best places in the world to build a mine. So definitely answers the questions around buildability and risks in terms of infrastructure and political risk as well.
So let's talk macro for a minute. Do you see inflation as a concern as the economy starts to pick back up?
Absolutely. It's actually one of my favorite themes. You see, everyone's seen what's going on with COVID. Governments for the last, 30 plus years or more have been binging on debt. And every crisis that we have, 1999 .com 2000 crash, we binged on debt, printed money, that created the housing bubble. 2007, 2008, we had a massive housing crash. We got it out by printing more money and printing low interest rates and pumping more free money in the system, right? You fast forward to COVID last year, major economic crisis, the solution was print more money, right? So we have this massive amount of debt that's piling up. And just to give your viewers some round numbers that are actually quite terrifying, the US government, I think at the end of this COVID, once Biden's done with his next stimulus package, will have $30 trillion of debt outstanding. And to put that in perspective, pre-pandemic, the US economy before the pandemic was probably the strongest economy we've seen probably in 20 years in terms of unemployment and economic growth. They were taking in $3 trillion a year of revenue and spending $4 trillion before the pandemic. So they were running $1 trillion deficit before all the crap hit the fan, pardon my language, right? So if you look at what happened afterwards now, the total budget spending was $4 trillion a year, of which 400 billion, 10% was interest expense. So we have now $30 trillion of debt. Say you go to 5% interest rates, which if you take a 100-year chart, 5% is still really, really low, right? 5% interest rates would be $1.5 trillion per year in interest expense alone. That would be 50%, half of all the money they took in taxes and revenues would have to go to pay interest. So long story short, what I see happening is the government cannot afford any interest rate basically above 0. Like they have to keep rates at 0 or 1%, because even 1% interest rate is $300 billion a year of interest, which is what they were paying pre-pandemic. So the debt has gone so high. It's like an individual user. You have too much money on your credit cards. The interest on your credit cards will just choke you, right? The government's in the exact same position as an individual has too much debt personally, is they can't afford the interest on their debt. So they're going to suppress rates. They're already seeing it. The Federal Reserve is buying bonds, keeping rates really, really low. And they're going to try to push inflation really, really hard, right? Because if you can devalue your dollars, you can pay back that 30 trillion of debt with paper that's worth a lot less. It's the only way out of this mess, really, is massive inflation with low rates, which to me is very, very bullish for gold and very, very bullish for any hard dollar commodity, because as you're printing more money, you're devaluing paper currency and you're going to be revaluing hard assets that have lasting value. So that's Canada is the same, Italy is the same, Europe is the same. We saw the European crisis 5 years ago. It's the same problem. Nobody can afford the debt that they've issued, so they've got to keep rates low, artificially low, which is going to create inflation. And they're not going to tell you that, but that is their secret recipe to get out of this mess, which is actually very bad for people, because inflation destroys wealth, right? But that's the only game they've got to get out of this crisis right now.
With apps like Robinhood and everything happening on social media, does this impact your investing strategy at all?
Yeah, I don't want to be a downer, but I would say that, Robinhood, what I'm seeing in general, and it's a generalization, right? But what I'm seeing on Robinhood, a lot of that is not investing. It's massive speculation, right? It's people that, God bless them, they want to invest in the market, but they don't really have a sound basis for their investment decisions. They're speculating, right? The last time I saw this kind of widespread retail participation in the stock market was 1997, 1998, 1999. And some of the kooky stuff that you're seeing, like GameStop and AMC theaters and different kind of stories that are going up 4,000 or 5,000%, companies that are effectively bankrupt, that are trading like they're the next best thing in the world. That to me is behavior very typical of bubbles and rampant speculation in the market. So it is affecting my investment framework. It's actually kind of spooking me out in general on the stock market, because when you see that kind of stuff happening in the market, options trading spiking, penny stocks spiking, real, speculative kind of behavior in the market, that typically is at the end of a cycle. Now that can go for 3 years, like it went in 1997, 98, 99. It can go for 6 months. They never ring a bell and tell you when the party's over. But that kind of behavior to me is causing me to get more and more defensive, in my positioning, and trying to kind of pulling out of the market, investing in more stores of value like gold to kind of prepare myself for what will eventually be a meltdown in the market at some point in time.
We are a small cap platform. We have recently seen money pouring into the small cap tech names. Do you think that this equities rally has more legs? And what sectors do you think are attractive to receive inflows next?
Yeah, I mean, look, I'm a small cap passionate investor. I've been doing small caps professionally for 17 years and personally for 25 plus years. So I think small caps is a fantastic place for your viewers to be involved because you can always find a great company at a $5-10 million market cap that has huge potential, that regardless of a market environment, with a positive market or negative environment, that company creates a huge amount of value, you do really, really well. You have to do your homework, you have to be really careful, study really hard and get all the facts straight, but you can make a lot of money in small cap stocks if you're willing to do the homework and roll up your sleeves. I would say you never know when I would clearly think that we're in a bubble phase right now. So that being said, I don't want your viewers sending me hate mail and saying like 2 years from now, we could still be, the S&P could be at 10,000. Like bubbles can go on for a long, long time. But I'd encourage you to be aware that a lot of money is flowing in the market right now in a very aggressive and not very cautious manner. So in general, myself, I'm quite defensive. Most sectors, I'm kind of pulling back. I'm investing in gold. I think gold is going to do very well on the back of my inflation theme. And gold is also an asset that when the market enters a difficult period, will trade higher. It's a store of value. It's a safe haven asset. Right now, people don't care about safe havens. They care about making as much money as they can because the market's doing really, really well. So I'm positioning myself quite defensively. But that being said, I'm always looking for a great investment idea in any sector that has fantastic potential. I'm a sector agnostic investor where if I see a great story that a great valuation, I'll invest in it. But in general, right now, I'm quite defensive in terms of my positioning.
So overall, what commodities are you the most bullish on? And conversely, which ones are you the most bearish on?
Yeah, so I'd say if you believe in my inflation theory and what the government has to do to kind of print their way out of this mess, I think most commodities should do very well. And that'll be true for most hard assets, whether it be a house or gold or copper. And so most commodities I'm quite constructive on. I'm most bullish on gold, like I said, because it has a dual property. It protects you very well against inflation, but it also tends to hold its value in a situation where most stock markets or other assets are collapsing in a kind of financial crisis type environment. It'll hold in better and rally sooner. I think what you're seeing in the United States with the Democrats taking full control of the presidency, the House and the Senate, I think EVs are going to be obviously pushed really, really hard. So I'm quite constructive on copper. Copper has obviously done very, very well. There's very few new copper discoveries globally. There's been a massive underinvestment in copper. So if you can find good small cap quality copper names that can become a mine, like I said earlier, that's an area I quite like as well. And the rest of the commodities that should do well, an inflation adjusted basis, they'll do a good job protecting your capital. So I'd be looking more for great stories, whether it's zinc, cobalt, copper, gold, silver. To me, it's really the quality of the story and what's the valuation I'm paying for that small cap story versus the commodity itself. I'm more commodity agnostic and more focused in on the bottom up fundamentals of the investments I'm looking at.
So lastly, you're an advisor with Arizona Metals. Why did you choose to get involved?
Yeah, I mentioned that one briefly earlier, but I mean, to me, it's one of those assets that I'm convinced that has potential to become a mine. So I'm quite positive on copper. I think I came involved because, when I saw it as a fantastic story, very high grade, huge scale potential, potentially highly profitable operation in the future, mining operation. But the company was lacking exposure. The stock was trading around 65, 70 cents when I joined. I thought, quite honestly, it was one of the best stories I've seen in terms of undeveloped potential, in terms of market cap expansion. But they didn't have a very wide audience for their story. In my 17 to 20 years in the capital markets, I have quite a big network of people that I know invest in this kind of asset. So I felt I could add a lot of value to the team in terms of exposing that story to a broader swath of investors. And so far, I've been on the job for 2 months. It's been very well received by the investors I've spoken to. They're starting to see the potential of the asset. But it truly has one of those kind of transformational type asset potential in Arizona, United States, and a great place to work in a safe jurisdiction, in a part of Arizona that's had 70 past producing mines. So you're in a county of Arizona that was basically built on mining. So they understand mining, they're supportive of mining. So I think it's definitely one to watch in the future.
Well, Michael, thank you so much for joining us on The Dive today.
Thank you so much. Pleasure being on your show.
And for our viewers at home, don't forget to like, subscribe, hit that notification bell. We'll see you next time on The Dive to talk all things small caps.